had this false narrative all year about how strong the U.S. economy was, how strong the labor market was. And despite the fact that Trump was elected by people who expressed their concerns about how weak the economy was, the number one issue in the election was the economy because it was weak and inflation because it was strong. The Fed has lost the inflation war, that it didn't win, it surrendered. And that far from, or rather than moving back down to 2%, that inflation is headed back up to 9%. In fact, it's going to get higher next time. So we've got the worst of both worlds coming, much higher inflation, a much weaker economy, and electing Donald Trump, unfortunately, is not going to change that. The Fed hasn't handled anything appropriately. Maybe if you go back to Paul Volcker, but prior to that, I don't think they've handled anything appropriately. I think that's why we're in the dire circumstances that we are in, is because of how inappropriate Fed policy has been, including the current policy. I mean, the Fed made a mistake in lowering rates to zero. It never should have lowered them to zero even before COVID, but it made a bigger mistake bringing them there after COVID. The Fed never should have done any quantitative easing, going back to the first time I did it in 2009. It's been one mistake after another. The Fed shouldn't have lowered rates to 1% and helped inflate the housing bubble. So, the mistakes have been going on ever since Greenspan was the Fed chairman, unfortunately, and it hasn't gotten any better. Rates are still too low. The Fed never should have stopped hiking. They never got into restrictive territory, despite the fact that they claim rates are restrictive. They're not restrictive in the sense that they're stopping the borrowing. The borrowing and spending has continued unabated by the public sector and the private sector. The savings rates have collapsed. The purpose of higher rates is to discourage borrowing and to encourage savings. But none of that has been achieved because the Fed stopped too soon. And so we continue to go deeper and deeper into debt, despite the fact that the Fed has hiked rates, and now the Fed is cutting rates. So they're pouring gasoline on the fire that they lit. First of all, unemployment rising, the way the Fed looks at it, would be a reason to cut, although they haven't even acknowledged any weakness in the labor market, despite the fact that there is tremendous evidence that the labor market strength was exaggerated over the past couple of years, and we've never actually had a strong labor market. But all the other economic data really has been weak, and it's been ignored. But I think the main reason the Fed is cutting rates is because the market expects them to do it. The Fed doesn't like to disappoint the market. So if markets expect 25, the Fed's going to deliver 25. And I have a feeling that Powell may suggest that the next rate cut is not a guarantee, that the Fed is kind of taking a wait and see attitude. They want to continue to evaluate the incoming data before deciding on the next move. So I don't know that they're necessarily going to say that, we're going to cut again at the next meeting, but they're certainly going to leave the door open to that possibility. And then we'll see what type of expectations the market develops between now and then based on the incoming data. But the odds are, if the markets build in the expectation of a cut, the Fed will deliver to meet those expectations. The Fed has used inflation as the economic tool every time something broke. But they've created so much inflation, and it's not just the Fed, it's central banks all around the world, that the number one problem that everybody is facing is now inflation. And so since inflation is the problem, inflation can't be the solution to the problem. So the Fed is finally in a box and there's no way out. And the same would be true for the ECB or the Bank of Japan or UK central bank. They're all in this predicament. Well, I think as the economy weakens and unemployment rises, I think, yes, he will be beating the drums for lower rates and a return to quantitative easing, the same thing that he did when he was president the first time. But the immediate effect, I don't know how much effect he'd have on it right out of the gate, but I know there is a lot of false optimism surrounding Trump and how great he's going to be for the economy. We had similar optimism the first time he was elected. Well, I would say that it's even more extreme now than it was then. Yeah, I think there will be some deregulation, but to the extent that, they will deregulate beyond what they did the first time remains to be seen. But, Trump was a big spender the first time he was in office. The budget deficits grew every year that he was president, as did the trade deficits, because government spending went up, even before COVID. You're talking about welfare spending too, and military spending. So I don't really see indications, despite a lot of talk out of Ramaswamy and Elon Musk about all the cutting they're going to do. They ultimately have no authority to cut anything. They're a think tank that can make suggestions to Congress. We've had plenty of suggestions to Congress to cut spending, and it's always ignored. Rand Paul's been doing that every year on the floor of the Senate. Nobody cares. It's nothing happens. The problem is Trump got a pistol pointed at himself and he's threatening to pull the trigger, and the rest of the world is panicking that maybe he'll do it. I mean, there's so much widespread ignorance when it comes to tariffs. I mean, yes, if the president imposes high tariffs on American citizens who buy goods from Canada, who buy goods from, China, then American citizens will buy fewer goods from those countries because they won't be able to afford it. Now, in most cases, they'll just have to do without those goods entirely because there are no substitutes that we produce domestically. And so, yes, that would be very harmful to Americans who can't buy things. Now, for the rest of the world, yes, they would not be able to sell as many goods to America. They would still sell a lot to America at higher prices that, for Americans, they would still get, their prices. Americans would just pay more. So their exports to America wouldn't go down to zero, even with the tariffs. But maybe they would go down 20 or 30%. I don't know. But they would still produce those products. And so if they don't sell them to America, they will sell them to the next highest bidder. There are plenty of other countries that would take the goods that Americans can't afford. It's not like we're the only, game in town. And, if there are no higher bidders in foreign markets, their own consumers can have a crack at buying that stuff. The only way that, Canada or China would increase the damage is by retaliating in some way, by either imposing tariffs on their citizens for buying stuff from us that would harm themselves, or if they try to do something like lower the value of their currency to make their goods cheaper for Americans, because when they do that, they make all goods more expensive for their own citizens. So the best thing that the rest of the world can do with respect to Trump's threats is let him do it. I think if Trump does do this, the risk is that the world realizes they'd be better off without exports to the United States, because the problem is we don't pay for anything that we import because we don't have the exports. All we do is print money and export inflation. And so Trump may in fact do them a favor if these tariffs are a wake-up call that they need to, get off of this relationship, which benefits the United States to the detriment of everybody else. And that's not inflation. Inflation is going to be prices going up every year. So unless Trump increases the tariffs on an annual basis, they're only going to result in a one-term spike in prices. And then, from there, they'll just go up at whatever rate the inflation, might have driven them. What's inflationary is if the tariffs help cause a recession and then the Fed prints more money to stimulate the economy, that's inflationary. To really make America competitive again in manufacturing from where we are now, it's going to require a weaker dollar, I think. And it's going to require a big recession, which nobody seems to want to embrace up there on Capitol Hill, because Trump promised an immediate economic boom, which can't be delivered. All that we can deliver is more air in the bubble. So if Trump just wants everybody to feel better immediately, the only way to do that is to inflate a bigger bubble than the one he inherited from Biden. And it's not like he just, inherited it because he turned it over to Biden. He inherited the bubble from Obama and allowed it to get bigger while he was president. What we need is a president who's going to prick it, but nobody wants to because they don't want to get blamed for the short-term pain that doing that would bring about. Everything we're doing should have already devalued the dollar. All the money printing and the deficit spending, the trade deficits, the budget deficits. If we were a normal country, the dollar would be much lower than it is today, but we're not, because we have the reserve currency and everybody just takes refuge in our currency. Like now people are worried about a trade war, and so they're buying dollars, even though the U.S. would be the biggest loser of any trade war because we're the biggest importer. And if we make imports a lot more expensive, it's going to be the most harmful to us. But again, people don't seem to understand that. And so they're buying the dollar anyway. So, the dollar could collapse at any time completely without the control of Trump. But obviously, if Trump wanted to orchestrate a dollar decline, they could do that. They could come out and specifically state that they wanted a lower dollar, and they would probably get one. They could encourage countries to intervene and sell dollars, although that might be counterproductive because if the world is selling dollars, they're also selling their treasuries, driving up interest rates. But then again, the Fed could print more money and buy those bonds and create more inflation to devalue the dollar. It's not good for America to have a weaker dollar, but as long as the dollar is as overpriced as it is, I think it's going to be very difficult for us to turn around the trade imbalance. Well, it's not a risk. It's already happening. The Fed has been monetizing the debt for years. That's what quantitative easing was all about. That's why the Fed has a near $7 trillion balance sheet. That's $7 trillion of debt that's been monetized. Now, they're going to monetize a lot more. I think they're just getting started. I don't think it's going to be exactly like Japan. I actually think it's going to be a lot worse. I think that beneath the surface, the Japanese economy was actually in better shape than ours. Yet their central bank made a lot of mistakes to create a situation that's much worse than it needed to be. And our central banks have made the same mistakes. But, we've been able to get away with it. The question is for how much longer. But I think that at the end of the day, we're much more vulnerable with the nature of our service sector economy, the destruction of our industrial base over the decades of reliance on the reserve status of the dollar, the enormity of the debt, not just the $7 trillion or $36 trillion national debt, but the couple of $100 trillion of unfunded liabilities, Social Security, Medicare, government pensions, guaranteed mortgages, guaranteed student loans. I mean, there's so much of debt out there that the U.S. government has got the U.S. taxpayer on the hook for. Of course, the taxpayer doesn't have the resources to make good on the debt, so it's just the Fed that prints the money. But it's trillions and trillions of money printing that's baked into the cake, and so the dollar has to go way down. I mean, this is just the beginning. You look at gold at $2,600. When the Fed was created, you could buy an ounce of gold for $20. So what does that tell you? I mean, the dollar has lost better than 99% of its purchasing power since the Fed came on the scene. Whereas before the Fed came on the scene, in 1789, you needed $20 to buy an ounce of gold. And in 1913, you could still buy the same ounce of gold for $20. So before the Fed, we had a stable dollar. Ever since the Fed, we've had a collapsing dollar. I think the speed of the collapse is accelerating and will accelerate from here. Well, it's been a good year for gold. Gold has pared its gains a bit in dollars since Trump was elected, although it's gone on to make new record highs in other currencies. Canadian dollar, the Australian dollar, the euro, the pound. We've seen record high gold prices after Trump was elected. And that's because, the dollar has benefited from a lot of the false optimism surrounding the U.S. economy and how it's going to fare relative to the rest of the world based on Trump. And I think if the world didn't have so much false optimism, I think the gold price would be quite a bit higher than it is now, probably $200-300 an ounce higher. I think we're going to get there. I think it's just going to take a little while for the illusion to fade and for people to wake up to the reality of the problem. I don't think it's a danger to gold. In fact, if anything, it may ultimately help gold because of all the money wasted on Bitcoin. It contributes to inflation. It contributes to making an economy less competitive and less productive. If we waste all of our money on Bitcoin and figuring out how to trade Bitcoin and mine Bitcoin and whatever, those are resources that can't be invested productively to produce things that people actually need, they actually want. Bitcoin is probably good for gold. It's bad for the people who buy Bitcoin because they could have bought gold instead. Now I know, yes, the people who bought Bitcoin years ago have made a lot more money on paper. The problem is most people who bought Bitcoin are not selling any of their Bitcoin because they think it's going to keep going up indefinitely. And so they haven't actually realized any of those gains. The smart people are selling. They're the ones that bought, 10 years ago, at a much lower price. And yeah, they're cashing out. They're laughing all the way to the bank, but the hodl gang is going to be left holding the bag. I think the main reason that Donald Trump embraced crypto was to get the votes of the crypto community, especially young people who typically vote Democrat. Now they had a reason to vote Republican because the Republican candidate was promising to make them rich. And so he got a lot of votes, but he also got a lot of campaign donations that he needed from the crypto industry. And so what he's doing now is paying back those donors by promoting Bitcoin and talking positively about a Bitcoin reserve so that the people who donated to his campaign can cash in on that investment by selling Bitcoin into all this hype. Now, whether or not he actually follows through with a Bitcoin reserve, which really to me is an act of treason. I think it's a terrible thing to do to the country, to reward a handful of crypto buyers at the expense of the entire country by wasting money, by going into debt to buy nothing. So I really hope that Trump doesn't do this. I think that the Loomis bill is going nowhere. I don't think there's any support for that bill outside of maybe a handful of people in the House or the Senate. So I think the only way there's a Bitcoin reserve is if Trump does it on his own by some kind of executive order, if that's even constitutional. I've got no problem if people want to buy Bitcoin. I think it's a foolish thing to do. I think it's a digital pyramid scheme, a blockchain letter. I think a lot of people are going to lose a lot of money, and I think it's bad for society that we're squandering this money. But, it's a free country, supposedly. You're free to squander your money. And just because that's bad for the country, you can squander it. You earn it, do whatever you want with it, right? But where I draw the line is on the government squandering the public's money. If people want to buy Bitcoin, they're free to do it. The U.S. government should not be doing it because I pay taxes. Even though I'm in Puerto Rico, I still pay a lot of taxes every year to the US government. I don't want my tax money used to buy Bitcoin. I don't want the government selling our gold. The US gold reserves are there to protect me. I don't want my gold reserves sold to buy Bitcoin. They're running out of buyers to keep the scheme going. And so because they can't convince people to voluntarily buy it, they need to force people to buy it using the power of government, which is so ironic because Bitcoin is supposed to be anti-government. It's supposed to be a free market alternative to government. But now we're trying to get government to come in there to keep the thing going. We got Wall Street in first, and we kind of played that for all they could. They saturated these ETFs, and now they needed another layer of buying. And so they've got their hopes on the US government.